So many deals, so little time. How do you make sure that you're getting through all the potential deals and analyzing them quickly enough to act on the ones that make sense and say goodbye to the rest without spending too much time on them? Today, I want to talk through how I run my numbers the same way every time in generally 5 minutes or less on single family and small multifamily properties. So for me, it always starts with using the same tools and resources so that I know I have consistency in how I'm running my numbers. I don't want to be comparing apples to oranges. I want to be always comparing apples to apples so that when I look at a whole bunch of deals, I know which ones are rising to the top and why. So first of all is my spreadsheet. And this is this pretty simple spreadsheet that I put together after running numbers online for a long time using different calculators that are out there. But really, it doesn't take too much effort to put together a spreadsheet, and I'm even happy to share mine with you. It's no big secret. All right, so I have my spreadsheet open, and I'm just going to go to Zillow. You can use Zillow, Trulia. Maybe you're getting MLS listings from an agent, or you're an agent yourself. Wherever you're finding your deals, find one that looks interesting and start putting that information in. So I always start with the key information about the property, the address, a brief description, and what the asking price is. Once I have that information in there, I'm going to look at the different costs associated with the purchase. So I'm going to assume it's just a traditional long-term buy and hold, not a BRRRR or anything like that. So I'm going to put 20 to 25% down. So in loan to value, I put 75% because I'll put down 25% on this deal. And then my down payment auto calculates in the spreadsheet. Now I go on to closing costs. You can reach out to a title company or someone else who is investing in your area and find out what they're generally paying for a closing on a single family property. I put in $2,500 in this case. And then a repair estimate. Again, talk to a property manager, fellow investors, a contractor, if you don't already know. But as you can see from this example here, it's in pretty good shape. It's got some work to be done. There might be some additional work that we could do in the future. I'm just putting $5,000 for this example. So then we move on to financing. My loan amount auto-calculates based on the information above the purchase price minus the down payment. And then loan points, I don't really pay loan points generally speaking. That might be something that comes up for you, so there's a spot on the spreadsheet in case that does. Interest rate. This is something that you could probably Google or ask fellow investors what they're getting, or if you already have a lender or two that you're talking with, ask them what you should expect in terms of your interest rate. So I put 7% here. We're still in a pretty high interest rate environment compared to a few years ago, which is fine. If the numbers work, the numbers work. And based on all that, I have a calculation in this monthly P&I cell that auto-calculates what my principal and interest payment would be. So next it's time to look at the most exciting part, the income that you could get from a property. My favorite tool to use for this is Rentometer. Again, there are lots of different tools you could use out there. You could be searching apartments.com or Zillow. I'm sure there are other tools like Rentometer, but I enjoy consistency in how I run my numbers, so I use the same tool every time. I have a Rentometer Pro subscription. Links below if you're interested in that. And then once I get the rents, I don't want to just put a single rent number in there. I like to have a range. It kind of helps you stress test the deal and see how it would perform if you got lower than you were hoping, or maybe even a little bit higher than you thought you could get. So I'll put the bottom and the top end of the range shown in Rentometer. And then the very first thing I put in here for an expense is vacancy loss. I think this is something that a lot of people miss early on. They are running their numbers and they get a whole bunch of expenses that they know could come up, and they forget about those times when it's going to be empty for a couple weeks or maybe a month or even longer when you're turning over tenants. So make sure you get that vacancy loss number in there. Based on my experience here in the St. Louis area across 24 rentals, I generally see tenants staying for 2 to 3 years. We have pretty good luck with renewals. So I feel pretty comfortable estimating about 5% in turnover, but 8% would get you about 1 month vacant per year. You could even go up from there if you think that it's going to be a tough one to fill. Hopefully you're not buying rentals that are really tough to fill, but definitely think through what your area and what your market is like when you determine what that vacancy loss number would be. So from there, we're going to go down to expenses. The principal and interest comes over from the other side of the spreadsheet, and taxes is a big one. You should be able to find this information across most cities and counties in America. There are generally websites where this information is publicly available. So you can see on my screen here that I have my local St. Louis City website up where I can search the address of the property and scroll right down and find the tax amount from the previous year. Now, from here on out, you're looking at things like insurance, water and trash, sewer, lawn, maybe others, like if there's electric or gas that you have to cover, generally tenants are covering that even in multifamily. So I don't have a separate line item for that. But if you were going to maybe do something as a midterm rental, you might have additional utility expenses. A lot of these things you're going to get to know over time what to expect in a single family or a small multifamily. But until you have that experience, talk to fellow investors and talk to property managers. You could also try calling the utility companies. I haven't had a ton of luck doing that, but I do think that there's a ton of resources out there that you can tap into to get a good idea of what these costs would be for you. I actually every year will pull an average of what I spent per unit on these different expenses. And I kind of keep a spreadsheet that you can see here with what those anticipated expenses would be. Another thing to keep in mind is that which utilities and other types of expenses you'll cover could vary based on whether it's a single family, where maybe they cover the water and the lawn care, or a multifamily where you cover those things and the tenants are only covering electric and gas. So make sure you know that as well. As another thing to ask your property managers and fellow investors about. And then down here at the bottom, you'll see that we're also accounting for regular maintenance and repairs, management fees if you're going to use management. And even if you don't use management, there are costs that you will incur by self-managing, such as a tenant portal or different tools that you pay subscriptions for. So you want to have something in that line. And then finally, CapEx. So that money that you're setting aside into a reserve account every single month for when the big ticket items hit, like a new roof or a new furnace. So these items are all percentages of the rent amount. So you can see they're grayed out because I have a calculation in there for some percent of the gross monthly rent going towards these categories. So pretty quick and easy. You've got your purchase amount, your financing, income and expenses. And then over here on the right, you can see what our potential return would be both at the low rent and the high rent. In this example, I'll play with the numbers a little bit, see if I can get it to a cash flow position. Even when I drop the amount quite a bit, I'm not seeing a great return on this property, but it's also been on the market for a long time. It might be worth following up on, or maybe this is one where you say, okay, I spent 4 or 5 minutes on it. It's not the deal for me. Let's move on to the next. But when you have a tried and true system where you know how to consistently run numbers across many deals, you can do this 3, 4, 5, 10 times in the matter of 30 minutes to an hour and really be getting great at analyzing deals and watching the opportunities that are out there on a daily basis. So good luck, try this at home, find your key tools and resources and run numbers every single day. You'll be buying a property before you know it. Have fun.